Hello, beautiful people, and welcome to My Money, Your Money, where we talk about all things money with the goal of closing the racial wealth gap. We are brought to you today by our generous sponsors, Demesman and Dover Accident Attorneys, the AARP, the Palm Beach Solid Waste Authority, and FAMU Mary. I'm your host, Brigette Lumpkins. I earned an MBA from Wharton and have worked at firms such as Goldman Sachs and Lehman Brothers, serving both institutional and private clients and raising capital for investment funds. Today's guest is Shila Nieves Burney, a venture capitalist or VC based in Atlanta, Georgia, investing in companies throughout the Southeast. What's exciting about Shila is that she's not your typical VC. The first thing that makes her unusual is she leads with humanity in such a warm, authentic way. And secondly, she's a Boricua, which is a real standout in the VC crowd.
Absolutely.
Finally, her earlier career path is rooted in community work, and she didn't attend any of the usual suspect schools VCs love so much, but she did attend an HBCU, FAMU, which I love. I would let her tell the rest of the story. Shila, welcome.
Thank you so much for having me. I'm excited to be with you, Brigette.
Oh, so excited. Okay. So our audience is very diverse within the Black diaspora, which means you're talking to a bunch of folks who may not know what venture capital is or what a venture capitalist does. Can you explain venture capital as an asset class and what VCs do?
Sure. So venture capital is one of the most riskiest asset classes, but also one of the rewarded ones. So typically we are investors that look for typically tech companies that can scale and scale quickly. Most venture capitalists are looking to put money to work, and we sort of expect like 10 times return on whatever we invest. And so typically we're looking to invest in high, high, high producing companies, which tend to be tech companies. And so a venture capitalist like myself, my charge is I work on behalf of my limited partners, which are my investors, to go out and find the best deals that will return basically the fund back to my investors. And so that for me, I am focused primarily on tech enabled companies. We don't do bio or deep tech or anything like that, but tech companies have been proven to be able to scale. Good tech companies have been proving to scale. So think Google, think Airbnb, some of these companies that added tech within their companies. And so they use that technology to scale and create all these other different companies. And so typically venture capitalists are looking for companies like that. So I spend my day trying to find the best opportunities that I think will return 10x back to my investors.
Okay, so you mentioned a term that is very often used in venture capital and investment companies, but regular people don't use, which is to scale. What does it mean for a company to be able to scale? What does that mean?
Sure. So think your typical business. It may be I hate to say typical, but small business, mom and pop shop serving a small amount of community. Tech scalable companies are looking to take over a certain percentage of a market. And so most funds that are venture backable are at least taking over 5% of that market. And that market size has to be at least 1 billion and up in order for us to see a good return. So scaling means that you're able to take this capital, put it into your company, and it's going to help you grow. And so we look at growth like you're hoping you're growing month over month, year over year. And that looks like, if I'm investing $1 million in your company, I'm expecting 10 million. So your annual revenue, how you do business has to be able to scale or grow at that potential so that you're able to return that type of money back to your investors. So
Okay.
scaling just means growing.
Okay, at a certain rate, because I can imagine like a plumbing business, right, which is a great business for the operator, but that is limited in its growth by the capacity of the person doing the work versus a technological platform can have like theoretically perhaps an infinite number of customers without a lot more human labor attached to it.
Absolutely. And any company that is looking to be venture backed should have at least at minimum $1 billion that they think that they are able to, tap into the market. That's the market size that everyone should basically have, 1 billion and up. And so you may not get to 1 billion, you may become a $500 billion company, that sort of thing. But the goal is that at least you have a market size of $1 billion that you are uniquely positioned to capture.
Okay. So, as I mentioned in the intro, you have a non traditional background in every way, which I think is really cool. And earlier today, I read an article, it was on PitchBook, about the schools where most venture funded founders come from, like
Right.
Stanford, the usual suspects, the Ivies plus Stanford's, and Stanford's technically not an Ivy, and a handful of other schools like MIT, where you see a lot of capital flowing to people who came from those schools and are starting companies. You didn't travel that path educationally or the typical VC career path. First, can you tell our audience a little bit about what that traditional path is and how you learned about VC and were inspired to start your own fund since you hadn't traveled that path?
Sure. So in 2018, after my career of 20 plus years investing in human capital and creating equitable solutions for communities, I decided to pivot to full-time entrepreneurship. Starting a business 3 months in, my business was focused on, again, supporting small businesses and nonprofits around the same thing that I've been doing for years, creating equitable solutions. But in March 2018, an entrepreneur approached me and wanted me to help him source investors. I had no idea what that meant, but that was actually what was venture capital. He had a tech company that was based in Africa, and he was looking to scale that company again, to grow that company. And he needed capital infusion to be able to do that. And so, me being like all supportive, let me help you out. When I
Mhm.
got to, as I helped him out for about 7 months, and I researched everything I could and realized was an asset class that typically we weren't privy to. And so I decided, after working with this entrepreneur for 7 months, hearing the horror stories of founders, being ghosted by potential investors, and even particular company, we had gotten a $5 million letter of intent with the possibility of up to $100 million.
Wow.
Yes, I mean, for the first time out the gate, it was like, pretty good for me, right? I just was
Okay. All right.
And then the investor decided to drop out of the deal and invest in hotels instead. And that was a huge problem for me because I had talked to so many other entrepreneurs who had stories like that.
Hmm.
I went on this journey. I met this man here in Atlanta. His name is Sig Mosley, one of the most prolific investors in town,
Hmm.
very early on, and asked him about, this particular deal. He wasn't interested, but I asked him if he would just, could you coach me and teach me about venture? Like, could you be my mentor, that sort of thing.
Hmm.
And I just found him by Googling who is the best investor in Atlanta. And he
Wow.
happened to be at the top.
So you cold called him.
I just cold called him, sent him an
I'm
email.
a fan of that. I'm a fan of cold calling. Really a big fan.
Yeah,
I
it
love it.
works. I sent him a message via LinkedIn and asked him if he would have coffee. And he said yes. No interest in the deal, but anytime you need some help, I'll be here. So in 2019, after the investor dropped out of the deal, I spent my time in every room you can think about where venture capital was talking. When they were talking about venture capital, the CFA Society, they were talking about $1 billion funds, and I was just thinking about a $5 million fund. But for me, I needed a 360 view of what venture capital was so that if there's an interest, if I can find my way in it, let me do it. The other thing I needed to do, I didn't want to be a trailblazer. I didn't want to be the first Black woman in venture capital. And so I Googled who is a Black woman in venture, and Arlen Hamilton was on every magazine at the time. And so
That's
she,
right. Backstage Capital.
yes,
And she
backstage.
also has a non-traditional background, a really compelling, interesting story herself.
Exactly. And so I saw her and I was like, check. Now I can go about finding out how can I contribute to venture capital.
Hmm.
And so at the end of 2019, I went back to Sig Mosley and said, Sig, I've got enough. I've gotten the education. I've made the connections. I'm ready to launch my own fund. What do you think about it? And he just said, it will be hard, but it's not impossible. And
Hmm.
that's all I needed. So as we are ending 2019, I decided to launch my fund, $5
Hmm.
million proof of concept. I met my first investor. He had committed $500,000. And then I decided I'm going to go out and raise this fund. And COVID happened. And so I was like, wait a minute, maybe this is
Yeah.
not the right decision. But it
Right.
was just me being very curious about why weren't Black, Latinx, and women getting funded at the same rate as their white male counterparts. It was just as
Right.
simple as that. And I got
Right.
all the research together and I was like, there's a problem in the market. I feel like I'm uniquely qualified to solve it. And so that's how I got into venture.
You bring up, that's a great segue to my next question, which is really about like, what are some of the challenges you face as a non-traditional VC given pattern matching, which is a term a lot of other venture capitalists brag about? Like, in terms of their technique and their way of making investments. They pattern match. Oh, two nerds from Stanford start a company and it blows up and becomes a unicorn. We want every person to look like them, be two nerds from Stanford. Well, that's fine for nerds from Stanford, but it's exclusionary of everyone else who didn't go to Stanford and who's not a nerd, right? And so pattern matching is a thing VCs brag about, and I think so do investors, right? They do the same thing. We call investors in this space limited partners because they're limited partners in your fund as investors. So, investors do the same thing in terms of pattern matching. So can you talk about how that's been like a challenge for you, COVID notwithstanding, because I know that's a whole other conversation, and how it's been an advantage?
So, Brigette, when I started, I didn't know anybody in venture. I didn't know if anyone saw this problem. I just felt like I saw it and I'm going to disrupt venture to solve it.
Mm-hmm.
And so, since that time, right, there's so many of us who almost came out at the same time attempting to raise a fund to solve this very same problem. And so, what you see now, while there have been so many white men, no one has ever said there are too many white men investing or VCs. So, let's stop that. But so we get a lot of that. How are you different from the other Black person who's also focused on this potential audience?
Right, because there's only room for one of y'all.
There's only room for one. And I think it was Bloomberg or somebody put an article out that which really upset the entire community because we're all differentiated. We all come into this with a certain thesis. A thesis is my sort of research on why I should be doing this. And that's what I go out and share with potential investors. And so they assume that we all had the same thesis. We're just going to invest in Black people and that's it. And so you get a lot of pushback because people assume, especially in my city, there were 4 of us who were looking to raise a fund at the same time. So I got a question, how are you different from those Black women? Even though it was clear as day how we were different, nobody wanted to peel the door back to find out. They just wanted to say, hey, you're all Black women, clearly you're raising the same type of fund. I've gotten questions like, so what if when you raise a fund, are you still going to be the Black woman on the panel? And I'm going, I was born Black, a Black Latina. I will die a Black Latina. I'm not, that doesn't change because I raise a venture fund. So there are some assumptions that, we move into venture and then we become different people. I'm still looking out for that same type of person who has, no access to capital. And then you get things like, what if you don't raise a fund? So what are you going to do then? It is the questions we get, they're biased, but I've learned over time how to turn those biased questions on its head and then turn it back to the person who's asking the question. And so you get a lot of folks who are going, well, you didn't go to this school, you didn't work on Wall Street or some financial institution. How are you able to go find entrepreneurs that you can back? And I'm going.
So they doubt your ability to source deals. They doubt your deal flow.
Absolutely.
That's so interesting.
It is. Most people want to know, what's your funnel, right? And which means what's your deal flow down to the person you're going to invest in. And I'm going, if the research there says that $7 trillion could be added back to our GDP, if we would invest in Black, Latinx, and women at the same rate where we invest in men. So I'm looking for the ones that are overlooked. Where y'all aren't looking, that's where I am looking. And because I am one of those folks who I'm able to relate to them, I can find them, I can hear their story and that sort of stuff. And so, whereas a white man is not going to understand why a Black woman is creating some sort of technology for hair, not knowing how big that market is for Black women, right?
Right.
And so for me, it's like, I know the market because I am the market. Right. And so I take that with me when I go into potential, to talk to potential investors, but they doubt our ability. They doubt there's enough entrepreneurs that we can invest in, right? Are you going to find enough to be able to source out and get that one? Absolutely. And we've proven that already. And so it's more or less educating the LP is what I've had to do, educating my investors or potential investors versus them educating me, because they don't know the market. Thereby, they make these assumptions that the market doesn't exist.
So let's talk a little bit more about the paradox of standing up a new fund as a Black Latina and attracting new investors who look like you. I don't know what your minimum check size is. I think it's 100 or 250. And, because of the wealth gap, right, that we're trying to address here, a lot of us don't have that kind of dough to put into one risky investment. So, how do you find Black or Latino folks, Latinx folks who have the capacity to write that kind of checks and will write them? And how can our community in general get access to your returns? Like if, say, you're mass affluent and you have $25,000 to invest, but not 250.
So I think one thing I want to educate the audience on is when folks make investments into our firms, it is not like real estate where you put that whole 25K, you write that check at one time. That's not how it works, and there are no dividends. And so for venture, so I'll just tell you a little bit of story. When I got ready to do my first close, there was myself and Tope Awatana from Calendly, which is a $3 billion company now founded by a Black guy out of Atlanta. I looked and I said at my proverbial cap table, and I said, there are no people of color. It's just the two of us. I'm going to perpetuate what white men have done for years. And so what I did is I carved out $1 million and said, I'm going to lower my minimum to be able to bring people of color in and women. And so we carved out 25 spots for 25K and 50K slots. And that's how we were able to get Black women, Latinx, and some other folks in. People have to be considered, right? We don't have 200, and if we have 250K, why would I give it to you? I could be doing something else with it.
Right, like taking care of Pookie and them back home.
We have all of that, right? We have the Black tax, most folks don't have. And so what I decided to do, let me educate investors, women, Black, Latinx, on what venture is, and then explain to them the process and see if they would invest. Out of those 25 slots, 19 women invested between the 25 and 50K. Some people went over, but you have to create room at the table where we've not been, is what I've done. I'm like, I know how this works now. So I know I can lower my minimum and let people in. And so you just create some type of program to do that. And that's what I did. I call it a diverse investor initiative, because I don't want to be the only one that gets wealthy. I want more people to get wealthy, right? And the wealth is not on my side of the table. It's on the limited partner side of the table.
Right.
We will get 80% of the returns of my returns, right? And so how do I bring more people into the space to make sure that you all, Black women, Latinx, and I keep saying women because I guess majority of women showed up, but people of color to be able to access this. And so you just have to be intentional, which I was, and it was successful. We were able to raise that $1 million in a few months. And so those are the kind of programs that should be out there, creating spaces. And I think a few funds have done it. I don't know if anybody's gone as far as I've gone, because all of those slots matter when I get ready to close. I can only have 99 investors. And if I give up 25, I'm giving up a lot of capital along the way.
That's right.
But it was worth it.
You're making room.
I'm making room. Yes.
And I think that's so important. And I do think that there's some innovative ways. There's some platforms where people are building syndicates that show up in your fund as one LP, but that requires, a lot of legwork on whoever's running that syndicate, right? On the part of that person. I want to go back to the numbers really quick and just the structure of the numbers, because you talked about the percentage of return that your investors get, et cetera. And you also said, you referred to the fact that an investment in you is a commitment. It's not like you write a check for 25,000. So can you, at that time, if your commitment is 25,000, it's the capital's called, et cetera. So can you, as simply as you can, run down how it works? One, first of all, starting with the fee structure, a typical venture capital fund fee structure, and where that money goes. And number two, how the return profile looks, like how the money, once it's committed, is paid into the fund and how it comes out of the fund back to the investor.
Sure. So most funds are a 10-year life cycle, meaning that we have between 1 and 10 years to return the fund back, right? And so, but you only have an investment period of over 3 to 5 years. And so the investment period is when we call the capital. And so imagine your commitment was 25K, right? Your first, with that first close, I'm calling 20% of that. So that's $5,000, I think, right? I'm doing my math right. That's $5,000. Most funds don't come back until another year later before they call capital, or unless they have an amazing deal that they want to get in, but they don't have the capital, so they'll call capital then. I've made a promise to my investors, because a lot of my folks have not invested in venture before, that I would only call capital once per year. And so once per year is typically another 20%. At each time, it's usually a 20% call. And how it's structured financially is 2% of that will go to the management company, which is where which would come to me. And if I had a sizable fund, that's where I would get paid from, and I would pay all of the bills that are related to the management company. So think your website, your things like that. And then there's the LP part of it, which is where we make investments into companies. And so that money sits in an account. It's managed by a fund administrator. It's not me, who, when I'm ready to make an investment, I say, hey, I'm ready. I have an investment. Here's all the terms. And then they will handle it from there in terms of making sure the capital gets to the founder. None of the capital ever gets in my hand, is what because I know we have a problem. Like, who's going to be managing my money? I manage it, but there are others who manage it on a day-to-day basis.
There's a third party that's keeping the money safe.
That manages it.
Yes. You can't abscond with the capital.
Exactly. And then there's the two. So the fund is usually a 2 and 20, 2% management fee, and then 20%, right? I raise the fund. My goal is a 3x and above target, which is a $75 million return. I will then receive 20% of that after all our bills are paid, and our investors will receive the 80% of that. And so that's why I said the winning is on the LP side. Not, yes, it's great to be a VC and everybody thinks it's sexy, but the money is being made really for the LPs is what we're doing. And so then they will get 80% of that. Some funds, like for me, I'm going to be recycling. So a company exits, we get a great win. We recycle it back into the fund and then continue to make investments. Some folks go ahead and just pay out right to their investors how they want. You get that company exits and there is a big win, and then we either pay out to our investors. I'm looking to recycle because recycling just means I can invest in more companies and hopefully get more wins. Right. At the end of that 10-year cycle, the fund is closed. 80%, wherever we are, goes to the investors, and 20% goes to the fund manager, which is myself.
Of the profits.
Of the profits, thank you. Right. Of the profits.
Of the profits, that's right. Okay, that's a great explanation. I think it's really straightforward. It took me a while to get it at first when I was, started in the business. Somebody had to tell me a few times. So what advice would you give someone like you interested in a career in venture capital? What skills do they need to develop? What should they major in? What internships and jobs should they be seeking out early on?
Okay. One thing I want to say is that, there has been a sexiness of VC that's been happening for years. Mm-hmm. And a lot of young people are like, I want to be a VC. Mm-hmm. Okay. So great, but you need to take some things into consideration, especially if you're going to strike it on your own like me. Mm-hmm. I networked myself to this, right? So I was out everywhere in every room meeting folks, that sort of stuff. I did take some education courses at Berkeley School of Law. They had a venture capital program. I took some courses with 500 startups. And so if you're not a finance major or, you're not getting your MBA, it's great to kind of get in some of those programs. Some of them are free. The best book you want to read on venture capital is, in my opinion, The Business of Venture Capital, not Venture Deals. I ran to Venture Deals thinking, oh my gosh, read Venture Deals and I'm going to be a great VC. And I love Brad Feld. He's a supporter of ours, but Venture Deals really talks to the entrepreneur and how the entrepreneur needs to go out and raise capital. But The Business of Venture Capital tells you about the nuts and bolts of raising a fund, how do you set your fund up, that sort of stuff. Okay. And you don't have to go to school for this. Find a mentor. Find somebody that you can intern with. We brought interns in who were very interested in VC and put them right into what it looks like to work for a startup venture fund. And so we brought in other particular investors to educate them around some of the other things, but we showed them what it's like in terms of how to look for deals. How do you assess the deals, right? What's the diligence like? And so looking for opportunities like that. If you're Black and a student, go to HBCU VC. They have a program where they will put you into a fund, working with that particular fund. If you're postgraduate and you're like, okay, I'm really interested, go to Black VC. Black VC has all kinds of educational programs, including the Black VC Institute. And so where none of this was available when I started, but now folks are saying, we're going to set up some programs for us so that we can learn some of these technical skills of investing. But I also say, find someone in your community who's done it before and just kind of hang out with them. Sig was in my community, and I just hung out with Sig. That's been 4 years we've been meeting for coffee. We still
Right.
meet for coffee to talk about venture. So find someone that's willing to, keep bring you under their wing and kind of show you, invite you to these different events where things are happening. But now there's way more opportunity to learn about venture than it was when I started.
Right. Well, yeah. I mean, I think that democratization of access is really excellent, and it's great to see groups like HBCU VC and Black VC crop up and just put that information out there, right? And that's what we're trying to do, right? Share information, etc. So I really want. We have about 4.5 minutes left, right? Time flies,
Right.
and I wanted to give you an opportunity to talk about ZANE and what you're doing, because not only do you have a non-traditional background, but you're doing something really cool and innovative alongside your fund, which is a community building organization called ZANE Access. So if you can talk about ZANE Venture Fund and ZANE Access and how those two intersect, that would be great.
Sure. So ZANE Venture Fund is an early stage venture fund. We're reinvesting in diverse founders and teams who are building tech-enabled solutions, primarily here in the Southeast. Our thesis is that diverse entrepreneurs outperform their peers by 33%, yet they remain invisible to traditional VC. We find them, fund them with the goal of getting them to Series A and beyond. And so minimum check size is between 50 to 500K. We're reserving about half of our fund for follow-on funding because we want to be there as our companies grow and scale. And so that is another differentiator for us. ZANE Access actually started before I actually started the fund, because after meeting this entrepreneur and working with him, I realized a lot of founders weren't ready for venture capital, and what all venture capital entails. And so how about I get them ready, right? And so I decided to create a capital readiness program, bringing the resources to the founders and saying, hey, why don't we created a cohort, we bring in other investors, we bring in attorneys to tell you about your legal aspect, because I think folks leave that part out. You really need to know about valuations, building your board. What does it look like on your cap table, right? These are things that have been foreign to entrepreneurs. They just know how to build a company. And so my goal was I'm not going to touch the company piece. That's another accelerator, but let me help you get capital ready. And so we've been doing that since 2020. We've graduated 67 companies. Those companies have gone on to raise $13 million and have about $10 billion in revenue. And so we're basically de-risking investments, right? Potential investor meets someone who comes out of our cohort, they have a due diligence packet ready.
Right.
And we want to make sure our founders have an equitable playing field when they go out to look for capital.
That's excellent. That's excellent. So have you made any investments yet through ZANE Venture Fund?
Absolutely. So we made 8 investments so far.
Okay.
The entrepreneurs they say we couldn't find, we found 8 diverse entrepreneurs and teams, all building tech-enabled solutions, and all here in the Southeast. And so our goal is people are like, well, what kind of tech? We're industry agnostic because right now we don't know what we don't know. So we're looking at companies and backing the entrepreneur first. If we feel like we're meeting incredible entrepreneurs and they've shared their whys on doing this, and that they are uniquely qualified to solve it, those are the entrepreneurs I'm looking for. Those bold entrepreneurs. I'll give you an example of one of them. One of the women, older Black woman, veteran, had been an entrepreneur, 20 years, but didn't have tech in her company. And she went to a program with, I can't remember the name of the organization, and she added tech. And so we found her very, very early on. We invested in her. She has since raised another round with Serena Williams. And so we are coming in really early, getting them a bit ready for the bigger checks. And so we invest at the pre-seed, seed, and opportunistic around the Series A. And so our entrepreneurs are doing well. What's interesting is that all the women, and I know I have a company in Miami, but the women are killing it.
Yeah.
Are scaling quickly. We provided some follow-on funding for those women. But we've made 8 investments, and we are looking to make more next year, depending on how much money we have under management. The ultimate goal, if we hit the $25 million target, we're looking to make 20 to 25 investments. And we're almost halfway there by investing in 8 already.
There you go.
Yeah.
Well, what an exciting story. It's really been such a pleasure having you with us. I really appreciate you making the time. I know you're recovering from a bit of a cold, so thank you so much for rallying to be with us. And I really look forward to seeing you again soon. Please watch our other MIA Media Group shows. Mondays, The Business of Black Business at 1 p.m. with Jay Reynolds. Tuesdays, My Money, Your Money with yours truly at 7 p.m. Wednesday, Soul at 7 with Nikki Gellin. Thursdays, Lunch with Legacy Leaders at 12 noon with Anne Marie Sorrell. And Flavor of South Florida at 7 p.m. with the legendary Chef Irie. And Fridays at 2 p.m., Black Health with Dr. Michelle Kirwan. Thank you so much for joining us, and let's work together to close that gap.